led by V3 Ventures, with participation from Kunal Behel and Rohit Bansal of Titan Capital. Funds will be used to boost R&D capabilities to enhance in-house formulations, conduct clinical testing, and develop targeted solutions for aging concerns. Beauty brand Antinorm raises 28 crore rupees in a seed funding round led by Fireside Ventures. Existing investors V3 Ventures and Rucum Capital reinvest in the company. Funds will accelerate platform expansion, talent hiring, and working capital. Renting platform Flint raises 21 crore rupees in a pre-Series A round led by Incubate Fund Asia, funding to comprise 17 crore rupees in equity and 4 crore rupees in debt. Funds will be used to scale the company's team and expand footprint beyond Bengaluru. Bengaluru-based voice AI startup Arrowhead raises 27 crore rupees in its seed funding round led by VC firm Stellaris Venture Partners. Funding round also sees participation from Cred's founder Kunal Shah, capital to be used for hiring and technology development. Elon Musk's XAI bags $20 billion in a funding round with the potential to lift the company's valuation to beyond $230 billion. Lead investors include NVIDIA and Cisco Investment. Digital healthcare platform Practo expands its footprint in the American market after a strong debut in UAE, launches its care navigation platform in the US. Since entering the US market, Practo has listed more than 2 lakh doctors on its platform, with its annual GMV run rate crossing over $75 million. Well, those were the headlines we've been tracking for you this evening. On What's Brewing Today, ID Fresh Food, the clean label foods brand and category creator in branded idli dosa batter and ready-to-cook Indian foods, has secured a strategic investment from Apax funds, advised by global private equity advisory firm Apax Partners. The deal marks Apax's first consumer brand investment in India, with the firm acquiring a significant minority stake as ID scales its presence across India and the Gulf while continuing to deliver profitable growth. What does this partnership mean for ID's next phase of expansion, innovation, and its long-term IPO ambitions? Joining me now is PC Mustafa, the chairman and global CEO of ID Fresh Food. PC, welcome back to Startup Street. ID Fresh, like just I mentioned, has secured a strategic investment from Apax, with Premji Invest and TPG Newquest partially exiting but staying invested. Now, Apax is taking a significant minority stake. Can you give us the number? And as I mentioned, this is Apax's first consumer brand investment in India. How hands-on will they be in decisions around distribution, branding, and category building? How transformational is this partnership for a business built on daily freshness?
Thank you, Shruti, for inviting me here. Since the numbers are highly confidential, I'll probably pass that question.
Okay.
Coming to the strategic partnership with Apax, it's a defining moment for ID. It's another turning point in the history of ID. We had excellent partners, and they continue to be on our cap table going forward as well. They want to be part of our growth journey going forward. Apax decided to invest their first consumer brand in ID.
Yes.
Because they believe in the story of freshness, story of a clean label food. And we were able to lead that effort in India. So what there's an opportunity for us to take this in international market as well. And that's the reason they decided to partner with us.
And what does Apax really bring to the table, PC?
I think a strong network in international business. And they're, especially in their consumer brands across the globe. And maybe some M&A opportunities as well.
All right.
Growth perspective.
We'll delve deeper into that. But ID today commands a 50 to 60% share in its core categories and operates across 50 plus cities. What has worked consistently in building scale while staying profitable in a low shelf life fresh food business? And how do you plan to continue outpacing competition as the clean label space gets more crowded?
I think we have stayed true to a promise from day one, and that's a strength. Many things have changed in ID, but one thing has never changed, which is a strong commitment to the value system. We will never take shortcuts. We will never add chemicals and preservatives in the food. We will never compromise on values. And that's a brand ID.
Okay.
That's the only reason that we have grown to this level. Going forward, we will continue to do the same thing that we have done so far, right? Which is expanding to newer markets, looking at newer products, adjacent categories, as well as category creation exercise. To answer your question with respect to the competition,
Yes.
I think it all depends on how you look at the competition. When you have a 60%, 70% category shareholder, looking at competition from other local brands is not the right approach. You got to create a category. You got to
Yes.
expand the pie. And we don't look at the local competition as a competitor because all of them put together will probably have around 30-35% market share.
Okay.
We look at the category, the
Sure.
homemade batter category as the opportunity. In fact, I keep telling my team that never look at other packaged batter as a category, a competition for you. Look at the grinders at home as the competition.
All right. On that note, your daily direct-to-retailer cold chain model is often cited as your moat. How difficult is this to replicate, and does it still give you an edge at a larger scale? And you mentioned M&A. Will we see ID do that this year?
Yes. So many people think that ID is a batter company, but we are probably one of the best fresh food distributors in the world. We know how to make fresh food every day, go to every store every day with fresh products, replenish stock on a daily basis, and make money out of it. And that is not that easy to replicate. Of course, anybody can create. There is nothing called a moat as it is. But then, we have created a network which will help us, scale this business to the next level. By the time somebody copies it, we will have to upgrade ourselves.
Innovation clearly has been central to ID's story, from batters to flatbreads to accompaniments. How do you institutionalize innovation without diluting the core promise of fresh and honest food? And which adjacent categories excite you the most right now? And where will ID not play, even if the opportunity looks big?
Yeah, there are a lot of adjacent categories that we looked at. Chutney, for example, is a large category for us. We have launched chutney around a year ago, and it is doing very well already. Then we have sambar we just launched, which will do very well according to me. We will actually look at all the categories where there is a clean label take on it. If there is a fresh clean label take on it, that's a category that we will look at. One thing that we will never do is to get into products with chemicals and preservatives. That is not ID.
Okay.
Because at ID, we believe growth at any cost is not the philosophy of ID. Growth at any cost is the philosophy of a cancer cell.
All right. Okay. You operate across India and the Gulf, PC. What kind of growth are you seeing in international markets? And can you walk us through your revenue and growth targets for the year ahead? Yeah, so we are planning to close 1,000 crore plus next year. 1,100 is what we're looking at in the total market, in the global market, with close to 20% EBITDA is the broad guideline we had agreed with internally. Let's see where we reach. Maybe even with some dilution in EBITDA, we should be still able to deliver the overall numbers. Our plan is to do an IPO next year by delivering the FY27 numbers. We plan to do IPO in October 27. Okay. So October 27 is when you're looking at an IPO? Yes. So how does this strategic investment from Apax align with your journey towards this public listing? Is this because of Apax coming on board? No, this was the plan earlier as well. My existing shareholders itself were a great asset on the cap table. Now, Apax, a global partner coming in, will really help us in our IPO journey. It's a great brand to be on the cap table. We had a lot of interest this time when we were looking for a funding. This is mostly secondary funding, as you know. But then, we decided to go with Apax because they will play a key role in our IPO journey. All right, one final question, if you could quickly answer that. You've grown 25% annually with double-digit EBITDA margins. Where does the next leg of growth, PC, come from? Will it be newer cities with newer products, or will it be an increase in consumption per household?
I wish more people start eating idli every day so that consumption becomes easier thing. But if I look at, I think I would look at 4 or 5 things. One, adjacent categories like sambar, chutney, those categories that we've really built. Category conversion from a homemade batter to ready-made batter, or a homemade parathas to ready-made paratha, and homemade chapati to ready-made chapati is what we look at. Third would be expansion to newer markets. When I said newer markets, today we are there in around 200 cities in India. We plan to add another 100 cities this year, right? So that's the geographical expansion we look at. Next one would be, international expansion with Apax coming on board. That would really help us because they have a strong connect in the global market. That will help us in our international expansion journey. And the fifth one would be looking at some inorganic opportunities like M&A, as I discussed earlier.
Okay, all right. We'll surely keep a track of all of this on Startup Street. PC Mustafa, many thanks for joining us today on Startup Street. Appreciate your time.
Thank you. God bless you all. Jai Hind.
All right. Moving on, India's gig economy is under renewed scrutiny with founders, policymakers and workers locked in a debate over pay, protections and dignity of work. But beyond delivery apps and ride-hailing platforms lies a much larger workforce powering India's economy. Today, we turn the spotlight on that reality. WorkIndia, a blue and grey collar job platform, has raised 97 crore rupees in a Series B round. Avishkar Capital led the round with 75 crore rupees, while existing investor B Next Capital invested 22 crore rupees. To talk to us about the fundraise, the future of work, worker trust and livelihoods at scale, joining me now is Nilesh Dungarwal, the co-founder and CEO of WorkIndia. Nilesh, welcome to Startup Street. Now, before we get to WorkIndia, India's gig economy is facing intense scrutiny. From where you sit, is the debate too narrowly focused on delivery and ride-hailing apps? Are we missing the larger story of India's blue and grey collar workforce? What is your viewpoint on the whole debate?
Thank you, Shruti, for having me on the show. So it is very narrowly focused at this moment. It is much broader. India has 23.7 crore blue-collar workers, and we are just talking about a very small fraction of people right now, right? And according to us, the core issues are like fraud jobs, right, which people get. So if you just move out and talk to like 10 people in this blue-collar workforce, you will find like every one of them would have basically faced this fraudulent job issue, right? People don't get salaries on time, right? People don't get salaries on time. People are not getting even salaries once they work for 30 days in the month, right? So those are the core issues that still persist, and it's our mission to basically work on that and solve it.
Sure.
Yeah.
Nilesh, if India gets the gig worker framework wrong, what's the biggest risk that we'll see? And as the gig and blue-collar debate intensifies, what is the one policy change you would like to see that could immediately improve the lives of India's workers?
See, the words like policy, framework, right, are basically more for like you and me who are sitting in a AC room and working, right? What we essentially feel is that getting transparent onto the money that they will be making, right? These people are working for money, working for dignity, right? And if you're able to make that transparent, for example, when there's any gig company want to scale up, they would basically give very high incentives or very high salaries to these gig workers, right? And when the profitability comes in, it becomes they make it very complicated, the way they will be getting money, because these are not like fixed jobs. These are like per delivery jobs or per ride jobs, right? So how can we bring transparency onto that?
Okay.
I think that's very important. Second point is a lot of salaries are still given in cash. So one of the policy change, if we can enable, is can all the salaries be given digitally?
Sure.
Because once that is done, all of these people will start getting access to loans, at a lower
Yes.
interest rate versus now they get it like 3-4% outside, right? So these are very small things that we need to work on to basically make sure that it does the job.
All right, coming to WorkIndia, which sits right at the heart of this workforce, you've just raised 97 crore rupees in a Series B round led by Avishkar Capital. Now, even as the company is profitable, so what was the objective of this raise and where will the capital be deployed?
Our purpose is to provide meaningful livelihood to 23.7 crore blue collar of India. And we have raised this money not for survival, but to scale the impact. Right? For example, in last 12 months, 1 crore candidates have used WorkIndia for hiring. Right? In last 12 months, more than 10 lakh companies have come to our platform and looked for jobs, provided jobs to these candidates. We employ close to 3 lakh candidates every month onto our platform. Now we want to get this number to 23.7 crore blue collar workers and 73 lakh companies, right, which are there onto this in India, right? So that's the whole objective why we've raised this money for.
Okay, you operate across 50 plus job categories, Nilesh, from delivery to warehouse jobs. Which categories are seeing the fastest growth right now and what's driving that demand?
So, because of the quick commerce, we're already seeing like a 70% year-on-year growth in delivery jobs. I think that's very paramount, right? We're also seeing 42% growth in domestic work that we are seeing. We have seen 40% because it's Make in India campaign. We have seen 40% growth in manufacturing. So these are the top three categories where we see immense growth today. Whereas other categories have also grown by 25-30%, but these are top three categories which really outshines the entire.
Sure. You know, MSMEs are central to your platform, Nilesh. How does technology help eliminate fraud and improve trust for both workers and small businesses? Also, with this fresh capital, what are the growth targets that you've set for yourself for the future in terms of scale, revenue, or livelihoods transformed?
So, first, like talking about fraud, right? So, we have a fraudulent job engine which just makes sure that no fraud jobs stay on WorkIndia. Right? So today, if you see, there are no fraud jobs because of our engine, right? It's a three-step process. Second, we use a lot of rules below that fraud engine to make sure that the job doesn't pass through. And third, we also have AI bots that we have recently implemented to make sure that it becomes very seamless to remove these fraud jobs onto our platform.
Okay.
So, and we have like close to 9.8 million data points across the country. In fact, we would have the highest number of fraud jobs that have come to our platform and we have not allowed them to come listed on the platform, right? And whereas it comes to the growth targets, again, our growth target is very, very simple. How can we quickly reach to 23.7 crore blue collar of India to give them jobs transparently, 100% genuine, and also provide dignity to them.
Sure.
That's our whole objective.
All right. One final question, and if you could answer that quickly. Do you see WorkIndia evolving from a recruitment platform into a broader ecosystem for workers, you know, spanning skilling, credit, or social security?
Yes. See, our purpose is to provide meaningful livelihoods, and jobs is just one part of it. Because when we did our research, we understood that jobs is the first essential thing that the candidate requires, right? And post that, everything comes like insurance, loans, and you would soon see us moving in that direction as well. Once we get to a significant scale with providing jobs.
All right. On that note, it's time for me to wrap up our conversation. Nilesh, many thanks for joining us on Startup Street today and wish you the very best with all your growth plans.
Thank you. Thank you, Shruti.
With that, it's time for us to head into a short break. But coming up, two-wheeler startup Simple Energy launches its Gen 2 scooter lineup. A special report when we return. Welcome back to Startup Street. Bengaluru-based electric two-wheeler firm Simple Energy has unveiled its Gen 2 scooter lineup. Prices begin at 1.39 lakh rupees. The lineup is headlined by the Simple Ultra, which the company claims is the first scooter offering a range of up to 400 kilometers on a single charge. Speaking to CNBC TV18's Meghna Sen at the launch event in Bengaluru, founder and CEO Suhas Rajkumar said the company is confident on the pricing with no need for early buyer discounts. He also expects the firm to turn EBITDA positive in 2 quarters. Listen in.
So there's no concept of early buyers as of today for us because everyone is purchased for the older generation. This generation goes on sales from today, and I think on the price side, I think we have very well priced it. Given how the competitors are today, I think we have done a lot of work on our BOM cost and everything else. At 1.39 starting introductory price, I think that's very well justified and placed for Gen 2. I think you've seen all the features and everything that we have added in this. I think we are fairly priced there, and I think consumers don't mind purchasing a scooter which offers safety features, and apart from everything else, the range and the tech that goes into the scooters.
So talking about your order book, how does your order book look right now? And as we're heading into the next financial year, so you compete with already established players like Ola Electric, Ather Energy. So what is the market share growth that you're targeting for?
I think over the last year, we have grown about 300% in revenue. We have grown from 10 stores to approx about, it was mentioned 71, we are 80 almost, 150 by March. So I think as a market share, we are growing rapidly. We should be about 0.5, 0.6% today. By March, it should be about 1.5%. But I don't think there's a quantifiable order book because now we're in sales, so we don't have pre-booking systems with us. It's all you go to the store, buy it from day one, right? So we have launched it today, the Ultra or be it any other model. It's available right on the menu. You just have to go there, order it, and you can enjoy the ride.
Got that. So are there any plans to venture into electric motorcycles? And if yes, will that be a mass market product?
No, not really. I think we are very well, stationed ourselves in EV two-wheelers of scooters. Bike market, there's a lot of questions that come in when we make a business model for it. Even on the innovation scale, we don't see much of things moving there. Of course, we keep our doors open, but I don't know if we have any plans in the near future. As of now, no. And scooter market is something that is growing, and we always want to hit the markets which consumers really buy and matter to, right? And I think we are very well placed here. And I think next should be four-wheelers rather than two-wheelers.
So what are Simple Energy's plans for international expansion? Like outside India, are you targeting any specific geography?
Maybe next 4 to 5 quarters, but not now.
So any like country, any specific countries?
It'll be for South Asian countries or Southeast. I think apart from that, we don't see anything else in our immediate plans. But today we are fine with this.
So moving on to domestic manufacturing, you are about to set up, looking to set up a manufacturing plant. So any like progress on that?
We have a manufacturing plant in Hosur, which is 2 lakh square feet, which is one of the largest EV manufacturing hubs today. And apart from that, as we grow, maybe in a few quarters, we shall look at a new plant. I think our chief guest today also mentioned the same plans that we will be expanding soon. I think this will, come into play maybe 2-3 quarters down the line, not now.
This is a sort of a capital intensive business, right? So looking ahead, when do you expect Simple Energy to turn EBITDA positive?
We're looking at about maybe 2 quarters from here, yeah.
So you have also indicated IPO plans going ahead. So any updated timeline on that? And if yes, how much are you planning, targeting to raise, and also where will you deploy the IPO proceeds?
I think about 3,000 crores is what we initially mentioned, and we'll stick to that. But on the timelines, we're looking at 27, 28. 27 is our target, maybe a quarter here and there. But I think we are well versed with the market conditions, and our plan is on the track. And I think as we are progressing, we are going ahead strongly.
Well, shifting focus from electric two-wheelers to electric toothbrushes. At CES 2026, Y-Brush introduced a toothbrush that can detect more than 300 health conditions, including early-stage diabetes, by analyzing the user's breath. Aishwarya Anand has more on this AI-enabled toothbrush. Take a look.
brushing isn't about dental hygiene anymore. It is also about health monitoring. Now, Halo has built-in sensors called Smart Nose. It detects biomarkers in your breath, basically chemical signals your body gives off. Now, these biomarkers can be early indicators of issues such as gum disease, metabolic stress, or conditions linked to diabetes and liver health. Well, your mouth is one of the fastest places where health changes show up. That's why researchers increasingly see oral health as window into overall health. Brush is trying to turn a daily habit into passive health. No extra steps required. Now they're also showcasing Duo Brush Connect. This connects via Wi-Fi and Bluetooth and shares brushing data securely with dentists and insurers. Now in the US, this includes Medicare and Medicaid, meaning oral care data can now be part of preventive healthcare. Brush is now part of Biotech Dental, a European dental tech group and partner of Henry Schein, the world's largest dental distributor. That's why this launch is happening here at CES, where consumer tech meets healthcare and AI. Over 90% of adults say they know oral health impacts overall health. Now the tech world is now finally asking, can your toothbrush help spot problems early? From faster brushing to AI-powered health signals, this is oral care going digital. And CES 2026 is where it's making that case.
Well, with that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side.